Hello again, everyone. This is Ken Weber, president of Weber Asset Management. Today is July 11th, 2025. I am here again in New York, although we will be moving offices, but just across the street. And as always, with Jack out in Lake Tahoe, Jack Bowers. Hey, Jack, good morning.
Good morning.
Well, it's afternoon for me, but morning for you. A lot to talk about. There's always a lot to talk about, but it seems now we have a couple of more couple of topics that are not normally part of our discussion. Jack, let's start with tariffs. So, no matter what people think of tariffs, good or bad, we do know on again, off again, up, down. 90 deals in 90 days didn't happen. Um, it's really a mess in terms of the ability of the companies to forecast because they don't know what's going to happen. Slowly, there seems to be very slowly some things coming into focus. So before we started recording, you were telling me some of your thoughts on tariffs. So let's dive into pretty much the hot topic of today in terms of the economy.
Yes. I think we're starting to see the dust settle a little bit, and we're now at least in a range that we think is going to stick. It's kind of in the 10 to 50% range, depending on the industry and the country. And there is actually some good news. I know the market's negatively reacting to the Canadian tariff declaration that Trump has done at 35%, but they exempted the USMCA compliant imports, which is probably more than 90% of them when it's all said and done. So
USMCA was, excuse me, was negotiated.
US
Trump won. Trump,
Mexico Canadian agreement that
right. But that was Trump won first term.
yes, during Trump's first term,
Right.
that was put in place. And so assuming those get the favorable 10% or lower, I think this is actually pretty good news. I know one positive sign yesterday, Tesla lowered their Canadian car prices back to pre-tariff levels now that because they are compliant and they know that this is kind of the permanent deal. So we are seeing some clarity, and it is, it's good news when the lowest tariff rate supply potentially in our biggest trading partner. So I think when this is all said and done, there will be some countries and particular commodities that have tariff rates of 50%. But I think a lot of this is going to be pretty easily absorbed at this point, and it might move the inflation needle a little bit over the summer, but I'm optimistic that we'll see continued progress on inflation, and that the tariffs are only amount to a one-time blip that's fairly easy to absorb. So I think there's a tendency to get distracted by the tariff thing. I think it's better to focus on the bigger picture, and AI is currently the bigger picture.
Yeah, we'll get to AI in a minute, but so I just want to say we still need clarity in terms of China. Uh,
Mhm.
you- a lot of stuff comes in from China, and those talks are really fluctuating just daily. And then there's just all the smaller countries. As you know, my wife is from Sri Lanka, and
Mhm.
Sri Lanka was hit with a, I don't know, 25% tariff just a couple of days ago.
Mhm.
We import coconut water from from Sri Lanka,
Well, yeah, that one's going to
and
be easy
a
to
few
pass
textiles,
on. Yeah.
a few textiles. I'm sorry, what?
Well, if you drink those flavored waters that have coconut flavoring them in, and I mean they're like $2 a bottle or whatever. So I imagine if the coconut water gets tariffed at 25% or whatever, it's going to be a few pennies at the retail level to absorb
Right,
that. I don't
right,
think
right, right.
people that drink those kind of drinks are really going to notice.
Right. I'm just making the point that the tariffs are all over the place, and countries that are not we don't think of as major trading partners are seemingly paying or going to be I don't want to use the word punished, but there'll be those
Yeah,
barriers put up for
right.
the free exchange of trade. So time will tell. For the record, Jack is a little more optimistic about the
Yeah.
effects of tariffs than I am. I think, when Trump took office, inflation was 3% or below, and
Mhm.
it's settled into a nice range now. of inflation. It hasn't gone up or down, but
Right.
I think it's 6 months, 9 months from now, this conversation will have greater clarity in terms of
Yeah.
how inflation, how tariffs have impacted
Yeah. I,
inflation.
I think it's important to understand also how companies apply tariffs. Basically the companies get to do it themselves, identifying the lowest cost price in the source country and applying the tariff to that price. So to give an example, you buy a dollar car part that's made out of plastic from China and it gets tariffed at 50%, then the company that's buying it is now paying $1.50. But if that same plastic part goes to some auto dealership network and it's turned around and sold, in the course of doing automotive repairs for $30, that 50% tariff translates to a 50-cent increase in cost. And depending on what multiplier they apply,
Right.
maybe it's $31 now. So, what sounds bad from the 50% standpoint, if you're dealing with a low volume commodity,
Yeah, I hear you. It's a good point. As I say, time will tell. We're taking educated guesses. Speaking of that, I did want to say that um, Jack doesn't deal directly with the clients as much as we do here in this office. Jack is the investment advisor.
mhm,
So when Biden came into office, we had a lot of clients panicking. I got to sell everything. The market's going to crash. Calm down. When Trump
yeah,
came into
yeah.
office, we had a lot of clients
Politically
calling.
motivated investing never works. Yeah.
Yeah, yeah. So when Trump came into office, clients called, I got to sell everything. The market's going to crash. Calm down. The markets do what the markets do.
Hmm.
The markets did great actually under Biden. The market is doing fine under Trump. There's a zillion factors that buffet the market, not Warren Buffett, that move the market, like winds, the buffeting of the forces. Many, many factors move the markets. The occupant of the White House is actually a smaller player in the overall scheme of things than people realize.
Yes, I go to the Chapman Economic Forecast, and he's always looking at how the stock market performs under different presidents and Congresses. And there's really no clear-cut advantage with one party or the other. It's really an exercise in futility to be trying to do market timing based around who's president or whatever. And we've tried
Yeah,
to emphasize that with our own clients. We have had a few leave this year because they wanted to stay in cash, and we said that we're not, here to supervise cash. We're here to supervise
right,
portfolios. So
right.
yeah.
Anyway, so also, I guess it is political, but the big bill that the
Mhm.
Trump administration pushed through, a lot of stuff in it. And let's talk about that.
Yeah.
I'll let you just jump in first.
Okay. Yeah. I think the big point of contention, with the falling out with Elon Musk and everything, is all based around federal spending and the failure to rein that in.
Elon
Yeah.
was pissed.
Yeah.
Yeah,
But I mean, that is the opportunity that was lost. I think it's a good thing to make some of the temporary tax cuts permanent, because it provides kind of direction and certainty for people that want to make large investments. And there's a lot of that happening these days. However, we had a chance there to change things around so that we reined in the deficit spending, and that opportunity was lost. It's going to have to be dealt with at some point down the road. I think we have some time, especially if a lot of these investments in AI infrastructure pay off and in the form of higher GDP down the road, which means you have more tax revenue to service the debt. The one thing that could really go south on us is if interest rates go up a lot, because then servicing the debt becomes that much more expensive, pulling in the day of reckoning. But I think we've got time to deal with it. It's clearly going to probably take another Congress down the road that does. And in the meantime, I think,
Jack, we were talking again before, and you were talking about interest rates and the national debt,
right.
the ballooning national debt.
Hmm.
And I don't want you to lose track of that. So talk to us about the debt as you see it and how this bill may be even worse than was forecast? Is that what you were?
Oh, yes. The media kind of misreported the debt situation. They talked long and loud about how the big beautiful bill increases the debt by another 3 to 4 trillion. But the bigger picture was like left unreported. Even before the big beautiful bill, federal debt, which currently stands at 35 trillion, was forecasted by the CBO to go up to 55 trillion over the next 10 years. The big beautiful bill potentially added 3 to 4 trillion to that 55 figure. But we're still looking at a situation where, uh, because of large federal deficits over the next decade, we see a big increase in federal debt with or without the big beautiful bill. There's a chance the tariffs will do a lot of offset to that 3 to 4 trillion, but we're still looking at a situation where we see a $20 trillion increase over the 35 that we have now, and it does push debt as a percent of GDP up into the 120% range at the end
Yep.
of
Which
10
is
years, and that's getting dicey. So
yep.
yeah, we better hope we have a lot of GDP growth. I think because of AI, we will. Corporations will be paying more taxes. Potentially, individuals will be paying more taxes just because people make more money and creep into higher tax brackets.
Yeah, yeah, yeah. Yeah, AI is the big unknown. I am very optimistic and also a little part of me very scared because the
Mhm.
more you read about AI and the rogue code
Yes.
that could be
Uh-huh.
out there,
Yeah,
uh,
it's a bit of a black box.
oh,
Yeah.
it's a big black
You
box when you
can
look at.
train this human brain, uh, but you don't really know what's inside of it. You can ask it questions, get responses, and it gives you an idea of the thinking process. But yeah, it is very much a black box, and changing small things can lead to big changes in outcomes.
Yes, yes, and it's also an energy hog. They're building
Yes. Yep.
huge data centers,
Hmm.
hundreds of acres of the most expensive and high-powered chips,
Yes.
computers running 24/7. Uh,
Hmm.
I read one new facility, Indiana, I think, uh, uses enough electricity to power 1 million homes.
Yes. Yeah, these
Yikes.
are major draws and probably permanent draws. Um, where Elon Musk in particular has been harping on how the US needs to do more to create electricity supply because China is doing it with solar and
And
battery.
China is way ahead of us in terms
Yeah.
of renewable energy
Hmm.
sources.
Yeah. Well, their mix is not as high. We have a higher percentage of renewable on our grid at around 40%. And China's not there yet, but they at the rate they're going with solar and batteries, I think they'll catch up quickly on the renewable front, and their total electricity supply is growing by leaps and bounds. So they will have the electricity to run anything they want to run,
Right.
including the energy transition demands and the AI demands.
Yeah.
The U.S. needs to do more. The track we're on right now suggests that we're going to see electricity prices triple if we don't do something to increase
Yeah.
supply.
And hopefully we won't have electricity prices triple because of various technologies that are out there that
Hmm.
are renewable energy and are good or neutral to the environment. Time will tell on that. But we're running out of time, Jack. We like to keep this to a certain time frame.
Yeah.
Let's
Hmm.
get to the stock market. The next three, 4 or 5 months, what do we see?
We're really kind of in a earnings market now. Assuming that the market concludes that tariffs are not going to move the inflation needle or the economic needle by much, which we're most of the way there on that as this all plays out. I think the market can get back to focusing on earnings, and there's a lot of interesting earnings things happening now as AI gets widely deployed, and I think there are going to be a lot of upside surprises. There may be some downside surprises, but on the whole, I think it's a favorable environment for companies right now. And if we're to see additional market gains through the balance of the year, it's definitely going to be because earnings do well.
Are you looking for the magnificent or whatever the the current acronym is now for the
Yes,
top
it's still Mag 7.
Mag 7, yeah.
Yeah.
Nvidia and Microsoft and all those guys.
Yeah, yeah, they were among the stocks that got hit the hardest when the whole tariff uncertainty began earlier this year, and they are now the ones that recovered the fastest over in recent times, as it became clear that the tariffs probably aren't going to be a major threat from an inflation standpoint or an economic standpoint. So now it's just waiting for the dust to completely settle on the whole tariff situation for companies to start making their investments. I talked a little bit about, how tariffs would ripple through on an auto part example. For the bigger things, cars and batteries and stuff that's, high value, but there isn't a lot of room for tariffs. The manufacturing simply moves to the U.S. on that, and you'll see a lot of companies, I think, as this all gets firmed up, making their manufacturing investments and moving the high value stuff to the U.S. The low value stuff, for the large part, the tariffs can be absorbed because it's not a big deal at the consumer level. But the high value stuff will all move because it has to move, and that's where you can see some interesting economic effects. It could boost GDP, and assuming consumers remain more confident as this kind of works through, we may
Yeah.
see kind of a pickup in consumer spending as well.
Right. The latest numbers on consumer spending, consumers are a little bit uh, holding back in
Right.
the
Yeah.
latest research. This is the back to school season, which is second only to the holiday season. And the numbers are a little iffy at the moment. Time will tell
Mhm.
if things straighten out. Jack, I want to quickly get to the bond market. What are we looking at
Yes. Well, the market is now kind of anticipating a couple of Fed rate cuts, and the Fed has been holding the short end of the curve high. You can look at the yield curve, and it's a clear distortion where the you go out around the 2 year point, and everything like drops down and then slopes up like a normal yield curve, but the very short end is still
for the
holding.
let's speak English to the people who are not as conversant with yield curves.
Oh, okay.
In terms,
In a normal situation, the short-term interest rates are lower than the long-term interest rates, which are
of
set
course,
by
yep.
the market. The Fed sets the short-term interest rates. Um, so you can kind of look at the maturities on a graph. Usually it's done with the Treasury maturities, looking at the 2 year Treasury, the 5 year, the 10 year, the 30 year. And you can kind of plot a curve. And normally, in normal times, that curve is upward sloping. And it is upward sloping now, with the exception of the very short end, which has is being held high by the Fed because of the tariff uncertainty. But
Right.
Powell has been on record several times saying that if the tariffs are going to cause an inflation problem, we'll see it this summer. And if it doesn't really amount to much, I think then that kind of clears the path for the Fed to kind of bring short-term interest rates down in line with what the market is saying they should be, which is, at least a percentage point lower.
Right.
So I would not be surprised if, as the market expects, we see a couple of quarter point rate cuts between now and the end of the year. Maybe we'll see three. It really depends on how things play out.
Time will tell. Jamie Dimon, one of the biggest names in the financial industry, came out this morning. He said that the markets have been complacent about tariffs, and that sort of had an immediate effect. He'll be right or he'll be wrong, just like the rest of us.
Yeah, I think the markets have been complacent, rightly so. As I've said before, this is a service economy with 75–80% of GDP, basically due to services
Right.
and stuff, and agriculture only amounts to, 25% or less. And so the tariffs are only involved in a small fraction of that 25%. It really, in the overall picture, should not move things in a major way. And I think the market was way overreacting to tariffs in the beginning of this, and now the market's kind of getting to a point where it understands the true impact pretty well.
Right, right. All right. Well, as we always say, time will tell. Everything we do here is an educated guess. Nobody knows for sure. Our crystal
Yeah.
ball is never not cloudy.
Yes. Managing risk, that's the key.
Managing risk, that's what we do. And talking about service industry, that's what we are. We try to give the best possible service to our loyal clients. All right, everybody, thank you for sticking with us. We're going into the meat of the summer months. Stay cool, stay healthy. And Jack, thank you. And we'll see you all next time. Thank you.